And we are back. Matt Davio here with Jack Barnes this afternoon. Jack, you and I are both calling in via Ubu from the great western state of Oregon. However, you're on the far southwest tip on the beach.
I am. In fact, one of those small little data points that no one ever needs to know or is interested in is that the farthest most western place in the North American continent is just about, call it 15 miles from here.
Which is where?
So, Port Orford.
Orford.
Port Orford. It's the town north of me.
Okay. And what is Port Orford known for besides being the westernmost tip of continental USA?
They have one of only 7 ports that does not have a port. They have a crane, and they lift all of their boats out of the water and put them on land. And so there's some pictures I'll send to you that I have somewhere else that there's all of these boats sitting on these wooden things with wheels, and they just roll their fleet around on land and then throw them over the side when they go fishing.
Well, now,
I guess there's only
that sounds to me like a government-run entity. You got to take the boats out of the water to unload them?
Well, no, actually the boats pull up to a dock there, and the crane will lift the loads out of the boat, and then they put a sling on the boat and sling the boat out of the water.
Okay, but they
actually unload them separately.
These are fishing boats, right?
Correct. This is the Oregon Dungeness Crab Fleet. Okay. And we also, our area here has never been drag fished, so the local fisheries are still virgin.
Okay.
And when you go fishing, you limit out. It's just a guarantee.
Why have they never been dragged? Is it Indian protected waters?
Rock piles. We have these rock piles that are like 50 feet tall. And they've never dragged it, and at this stage they can't drag it due to environmental concerns. So what we have is virgin fishing here, some of the best on the planet.
So I was just in your neck of the woods, the Gold Coast. I was in Bandon in the Gold Coast, I guess it was late March, early April this year with the family for spring break. And let me guess, the weather there is probably the same weather that I saw in March. Anywhere from 50 to 70 degrees.
Yes, year-round. In January, our warmest weather so far this year was in late January. And we were in the mid-70s, sunny for like 3 weeks, getting sunburns.
That's one of my favorite times to come over to Bandon Dunes is that late January, early February, because I get the better locals only rates, and none of the folks that are from the East Coast are playing golf over there. And I get the best weather.
Yeah. I mean, I'm not arguing. In fact, the warmest day of the year is supposed to be tomorrow. We're supposed to actually break into the 70s, maybe 80. And that will be the hottest day of the summer. I actually turned the air conditioner on in my car for the first time today. I just felt like it.
So, Jack Barnes, you are the writer of Macro Contrarians, which I love the name of because I consider myself pretty much that moniker. I like the names Macro Contrarian and Sell First. Those are names I prefer, to be honest with you.
Yeah.
So, just so people can find you, you're on the Stock Twits Network and also on the Twitter feed.
I was, actually.
Okay.
I was there. And I'm rehosted now by myself.
Perfect. Even better. Okay.
JackHBarnes.com is my blog.
Okay.
And MacroContrarians.com is the video blog where the roundtable shows that I host are posted. So that would be where shows about macroeconomics are discussed.
So, Jack, you also can be found on the Twitter feed. Can you turn down your incoming a little bit? Thank you. Perfect. And we can find you on the Twitter feed also at Jack H. Barnes, just as your name says here on the Ubu. So I want to give everybody a chance to find you on the web. Appreciate you coming on. And tell us a little bit what you mean by macro contrarian when you use that term.
Sure. In I used to be a hedge fund manager at a different time in my life, and I found,
You and me both.
And so at my shop, we did a top-down approach, and what we would do is try to find the large trends in the economy, and we're not so much talking about the ones that are obvious today, but the ones that are just starting. And so what we would try to do is find a top-down idea, and then we would look for bottom-up ideas inside of it. And so, and one of the things that I found is that contrarian investing, for me, and everyone has their own natural style of investing, but I would say that I've made my most success being a contrarian. And contrarian has become very popular lately, as everyone is trying to find something that is different than what has been. But to me, a true contrarian is someone who says, here's an example. When you have a market that everybody is leaning in one direction on, and you tilt the boat all the way to the edge of the water so that someone at the rail could reach out and touch the water,
right.
The contrarian is the person on the other side of the boat, all the way up in the air, looking down going, this isn't good.
Well, that's the way I look at it too. You know, sometimes being a contrarian is one of the most painful things, I believe, and I think it actually takes that pain to know you're probably right to an extent. Now you have to draw limits on how much pain you can take, but I think
absolutely
true macro contrarians look that way, Jack, and they're probably, you know, I tended to perform the same way, and I tended to be early on my macro views, maybe two or three years early, and you know, so I've learned over time that I can see a trend well before it's going to start, but I should probably wait a while before I take the other side.
I'm even going to confess some truth here. All right, here comes a little confession. I was the big idea person in my shop, and so I would sometimes take 3, 4, 5 days off when I had a new real idea cooking, and I just let the shop run itself. And then I'd come in all excited, and I would start laying out this whole new grand thought I had to my team.
Yeah.
And they'd all look at each other, and they'd get all excited, and my team was broken up between, let's put it this way, I was the portfolio manager, and then I had analysts and I had traders. My analysts and traders would huddle up, and they would put on the reverse trade instantaneously.
Right.
I'm not making this up. And it was, and I'm, you know, and I'm like, okay, what are we doing? Right. You know, the next day I'm like, what do we put on? And I'd say, guys, that's backwards. What the hell are you doing to me? And my face would get all red and I'd get all flushed, but they were used to this. Yeah. They'd look at me and they go, sir, you're always early. We're just, looking for the transition point, and then we'll swap.
We're gonna ride the end of the trend until it really truly gives us a blow off, and so you know, would you say then, Jack, you're more of a fundamental macro contrarian than you are a technical?
Yeah, I started out as a fundamentalist, and so I was a bottoms up guy, and then I realized that my best way of spotting trends was top down.
Yeah.
So I was fundamentals. Then what I call my analyst, he had an MBA and had all of the fundamentals built into him. But by nature, he was a technical analyst and preferred the TA approach.
Yeah.
So I would pick the big ideas. He would then work on what he thought was the best entry and exit for our team.
Right.
And then my traders pulled triggers.
They just listen to the consensus between you and your trader or you and your analyst and put on the trades, right? Yeah. That's probably a good approach. I've got to say, you know, I kind of started reverse. I've been at this game for 20 years, and to make another ultimate confession, I've told this story before, but I started a short biased hedge fund in 2002. Planning on somewhere between 05 and 08, the world to have a financial calamity meltdown. And I shut my fund at the end of 2006 after I was a short bias fund. I had decent, 8 to 12% returns year in, year out for those 4 years. But finally, one of my biggest investors, I was a small fund, I maybe had 25 million. One of my biggest investors said in summer of 06, And I was fully, positioned to capitalize on what started happening in late 07 and 08. But one of my biggest investors said, I need to pull out our investment, which at that time was probably 20% of my fund. We're going to buy some more real estate in the summer of 06. And I had this conversation. I said, you realize that you're basically going to not only give yourself a margin call, you're going to give the fund a margin call, and in turn all of the investors margin call, because I'm going to have to unwind positions over the next quarter, 6 months. I just can't, I can't put them back on it where I have the positions.
Yeah.
And he said yes. And I said, okay. And it was painful. Again, that year we ended slightly down because of that. And then 07 came, and again, we weren't running the fund and watching it from the sidelines. So I was one of those guys in the Michael Lewis book, The Big Short, that had the idea way too early, but didn't really capitalize on it for my investors. So that's my sad story. I'm sticking to it.
I was a little bit lucky here. I want to say that, in the sense that we were able we were fully functioning in 08. And I was shorting too soon in 07, so I actually had my negative year in 07. I got all excited and started swinging hard when I should have started bunting, I think would be a better way of putting it, in August. So when the market did the final blow-off run from August to October, November,
right.
That was painful in 07.
Right. Yeah.
As it came down, I started making money again. I was fully negative biased at that point, and if you actually were to view some of the holdings I had at the time in scale, for its size, I was definitively short.
I'm curious. I was mostly equities and options. I wasn't doing any CDSs. I was not that. I was not that highbrow. The Michael Burry style.
Same here. I consider myself a stupid equity guy.
Yeah, so I was too. And, again, selfishly it all played out, but, it was painful to watch, and that's what makes this game so difficult, and quite frankly why I really choose not to run a portfolio anymore. And I tend to be, more of a, short-term trader myself, just for my own money, for the last 5 years since then.
We were up. At the time I had two hedge funds. I had a long short equity, and I had what was actually a long only equity, and that was our retirement IRA fund. So we didn't short in it so that we didn't have margin issues.
Right.
But what we did do was reverse ETFs and puts. And so while it was a long only fund, in 2008, it was up 10% when the market was down 38% or so.
Right.
And then my long short fund was up about 16% at the same time.
That's great.
And the thing that hit us was during the crunch, if investors had given me 20% of their money and they had it diversified across five managers, they had managers that were down 30, 40, 50, 60, 70%. And they told me that they needed to pull money out of my management that was in positive returns, because they needed that money to live on, while they waited for these guys to make back their losses. Yeah. So I had capital drawdowns due to success.
Yeah, well, and I'm sure you're not the only one that has that same story. That's what's so interesting about this, is that, which I think says something for the name Macro Contrarian, because even though you were making the money, they were pulling it out of that because they wanted to keep the losers until those got back to even, which is, again, the way that most people trade and behave across the board.
Yeah.
Yeah. And that's also what's so broken about it. Gosh. To me, that's one of those. That's also why I prefer to be a macro contrarian, because people don't change. They do, the same pattern. The next generation will do the same thing. And that's why it comes along.
Absolutely. Humanity hasn't changed in the last 100 years in the stock market that I'm able to tell.
Well, I think you could even probably go back to the West Indies trade and,
Yeah, there probably hasn't been that many changes.
Probably go back before the days of Christ even, and the gambling that went on in Greece and continues to go on in Greece to this day. So let's get on to, Macro Contrarian Thoughts here. Debt ceiling is all the rage. I'm sick and tired of it. I've tweeted about it the last couple of days. I finally snapped and said, I'm sick and tired of big government and big media trying to be fear mongers. I'm probably one of the crazy people that's long the dollar and have been for the last couple months. And, I'm up a little bit of money. The thing's been down as low as 72, 73, and it's back to the 73s today. So I'm still okay. And I've got a, parachute ready to be pulled if we do close a week, under that old low. What are your thoughts on this whole debt ceiling noise, as I'll call it, and where we are?
I'm going to go out on a limb here. So, make sure you got your recording running. I actually think that they're playing chicken and they're not going to find a solution. I thought there was going to be one until about 5 days ago. Okay. And I started changing my opinion about 5 days ago. I'm one of those people that will state, I believe this. And then when I get new information, I will state I've changed my opinion. Yep. I was wrong. Yep. Based on new information, this is what I now think.
Yep.
And based on that strategy and approach in life, to me, it appears that they have decided to take this to the full end.
Okay.
And they're going to try to cause a reset. And, I'll be honest with you. My parents were born in the 1920s. They remember the 1930s very well. That's when they grew up as kids. My dad was in World War II and spent 4 years in the Pacific, in the Navy. So, 4 years in the Navy and ended up in combat in the Pacific, but wasn't in the Pacific the whole 4 years. But anyway, that generation has been here before. Mm-hmm. They've seen this before. The kids, the younger generation, younger than you and I, they like to make statements that this can't happen, this won't happen, or whatever. Older generation says, two things. It can happen, and we've been here before, and the nation was much better after we went through a really hard reset last time. So, suck it up, tighten the belt, don't allow the government to spend more than 3 to 5% of what it's bringing in, not 30 or whatever we're at now.
Right.
It's funny because I see on the Twitter feed, obviously, there's two very diametric conversations going on about this topic. And I'm not trying to pound one side or the other because, quite frankly, I'm agnostic on either party. But I will say this. The U.S., the way it's being ran and has been ran since 2007, we'll just use that as an arbitrary cutoff, is not sustainable, and no one has taken any actions towards sustainability.
Right.
What is happening now is addressing sustainability, but they're doing it in a, instead of giving the patient antibiotics, they're saying, let's just throw the guy into a dark corner and lock the cell down, and when he comes out of detox, he'll be better.
Right.
I'm going to say that my gut instinct is that there will be a deal done August, September. The U.S. will lose its AAA. My expectation, though, is that the AAA status is going to be changed a bit. The only nation with true AAA that I'm aware of is Germany per se. And if you take a look at the funding structure of the European macro bailout funds that they've set up, Germany's AAA goes out the window as soon as France loses its AA. Because Germany's funding structure all of a sudden kicks into such a level that Germany is supposedly bailing out all of Europe. That won't happen.
Right.
So my guess is the U.S., France, Belgium, Italy, and Germany all find themselves derated, and AA becomes the new AAA.
Okay.
And in which case you then go to the money market funds and you say you're allowed to hold sovereign AA.
Right.
Because the thing that no one's talking about right now is the money market funds are going to blow up. You are not going to have a $1 money market account when U.S. trash defaults and funds are not available. The Fed Boston version of the Fed, not to be confused with the New York Fed.
Right.
The Boston Fed is stating here and now that they are putting out solutions they believe will get money markets through this process, but they are now calling it a variable NAV. So your 100 cents on the dollar is now worth 98 cents.
Sure.
That's how they're going to get through this problem. I remember when busting the buck was an unheard of concept, and then in '08 it happened, and they had to unwind the money funds. Now the money market accounts also, it's like 30% of the paper inside of them is European banks. Now, exactly how well capitalized are European banks? They're not.
Right. Well, so if your scenario plays out even close to what you're suggesting, ultimately there may be a little pain, but the dollar will strengthen because of that, because there will be some definitive action on it.
Absolutely. I am actually a dollar bull. I am not a bull during the negotiations. I'm a bull as soon as this thing is over with.
Yeah. And you say that because where do you see in your, where's the risk in your mind of the dollar heading, I guess, before that decision's made?
I will blink. I'll reevaluate my estimations when we have a 69 on the dollar.
Okay.
To me, the minute you crack the 70, that's real.
Yeah.
You're now playing another set of numbers now.
Right.
I think that these idiots can push each other around to 71, and then the dollar bounces back to 75. That kind of motion.
Yep.
Near term. However, and here's the ironic thing, you take a look at like what Druckenmiller said about U.S. Treasuries. If we default, the treasuries that are issued go up in value.
Right.
Because we're not issuing new ones.
Right.
You have an economy that's still continuing on. So you are forcing a deleveraging by not issuing treasuries.
Well, and I think, I think your suggestions, and I'll put them as opportunities, because I look at it, I by the way, tend to agree with you on most of this stuff, and I think it should happen.
Connection.
It should be allowed to happen. I mean, this is the type of move that I think people can handle the truth, and heads should roll because of the bad decisions that have been made. And we should have not only a realignment of the currency, but a realignment of our Congress, Senate, President. And quite frankly, I'm agnostic also. To me, it's not one party versus the other. They all need to be rinsed, washed, and clear the slate and start over.
Yes. I posted something on Twitter today that said flush DC in 2012.
Yeah.
And I'm talking everybody.
I saw some Rasmussen poll today that said today 6% of Americans are in support of their congressman. That's I've never heard anything that low. So there is, I don't think there's anybody out there that's happy. And quite frankly, I think people are,
shouldn't be.
They're so apathetic now though too. We're almost, and what's always made this country great, and any true democracy, is that you have the right and the opportunity to fail. And failure brings change, and change brings innovation and development and growth. And whether that's personal down to, public, it doesn't matter. To me, it's all the same. We all need to hit our bottoms before we can rise again.
Go ahead.
As a trader, I mean, we take losses, and you gotta pick yourself up and wipe yourself off and start over again. That's just the way it goes, and it should be no different. Again, you and I couldn't run our books the way any government, and again, from federal down to local municipalities, nobody runs a clean book of books anymore. It's insane.
I'm not going to go into super details here, but my wife runs a municipality. She's a government manager.
Okay.
And the government that she runs, when she arrived, it had been mismanaged, but it had been mismanaged in the most bizarre way.
Okay.
This was a city that did not invest any of its money in the market, so when the stock market collapsed, there was no hit.
Right.
None. They didn't lose a penny during the crisis.
No bonds, nothing.
No, nothing. All they owned was CDs and cash.
Okay.
And they had debt. And so my wife asked me in the big picture, she's like, which of these debts would you pay off? And I looked at them. I'm like, well, honey, you're getting a less than a 1% rate of return here, and you're paying 5% here. That's a 4% rate of return if you just pay off the debt.
Yeah.
she went around and she paid down the city. By her estimates, it's one of the healthiest cities in Oregon at this stage. She has not laid off anyone. She's been hiring people. She's been paying off debt. She's been investing in infrastructure. And her books are balanced for the next 3 to 5 years without a negative draw.
Well, maybe we should bring her to the governor's office and/or the federal offices. And it sounds like we have somebody who understands finance. So,
well, I think the rest of the group understands looting. There's a difference. I think our government understands looting. And
I love that. Looting. It's exactly what it is.
And my wife understands savings. So there's a difference in strategy.
You know, I grew up in Detroit, Michigan, and I was too young to remember, but my parents lived right in the heart of the late 60s riots, right in the area where that was going on, and my dad had some good pictures of looting, so that's what pops into my head when you say looting.
Yeah.
Let's switch gears a little bit. We were talking a little bit about the treasury funds that don't really own U.S. treasuries, and they own they own European banks. So, what do you think of the European bank stress tests that are ongoing, and supposedly only 6 banks are failing?
Yeah, that's a crock.
Okay.
And you would have thought that they had figured that out after the first one that failed. The second one was just as bad. It had 0 haircuts in it. None. Not it. There was no sovereign haircuts in it. Oh, by the way, we're going to have haircuts in 6 weeks. So, that's kind of like doing a stress test, like the U.S. one, where we stress tested our banks and said that unemployment will never exceed, draw an arbitrary number, let's say 9%. And all of a sudden, you've got unemployment at 9.9%. That's off the chart of the stress test we even applied to ourselves.
Yeah.
So, guys, if you know conceptually that you're close, give or take, stress test here, not down here.
Right.
It doesn't build any trust.
Well,
take a look.
Go ahead.
I was just going to say that the European sovereign CDS rates did not come in under the latest bailout.
Yeah.
So surprise, dun-dun-dun, they're going up again. So the whole thing in Europe, the latest bailout wasn't a bailout, didn't work, no confidence was returned, nor will any confidence be returned as long as both sides try to kick the can instead of accepting reality. And I'm going to put it this way. If reality is you have $20 in your wallet and you have no credit cards, you can only buy $20 worth of X, whatever it is. And our politicians have reached the stage, I'm going to say this, Western civilization, both North America and Western Europe, our politicians have reached the stage of socialism, where they believe that they have the ability to give out $7 worth or $25 worth of gains, $30 worth of gains on that 20 in the wallet. There's no gripping of reality. And one of the things I noticed in my Twitter feed was an argument from what I think of as the left. And their argument was, well, America is so far down the road, it's not salvageable. So you just need to raise the debt limit and print more.
Right.
Which is, I'm so addicted to my heroin, you cannot take me off my heroin.
Just give me more until I die, like Amy Winehouse.
Just give me more.
Yeah.
Until I die. And then, you know what, I'm a corpse and I was dying already. Well, some of us say that this nation is still salvageable.
Yeah.
And this isn't just America. This is also Western Europe. We have feckless managers out there running our governments, and they suck. That's my personal opinion on all sides.
Yeah.
No one is trying to do the right thing for society. Everyone is trying to take the maximum out for themselves.
Everybody's trying to loot. Yeah.
Yes. Yeah, we have armies of looters and very few people that are caretakers, and the caretakers are now being punished.
Yeah.
I had an argument with a cousin of mine, and this is 25 years ago. I have a memory that doesn't forget much. I can replay conversations. And the conversation I had about 25 years ago, and it made me mad at the time, because he was saying, Jack, this country's going to reach a point where those who work are it is not to their benefit or reason to work. Call it going John Galt. Okay. The system is going to go John Galt. And you need to be thinking about where you're going to move your productive ass because America is going to go down in shambles around you. And by the way, this person was a U.S. military combat soldier, was a lawyer, was a medical technician, was someone who had done everything and had put anything they had ever come across, was a Green Beret for 11 years, found himself pulled in front of Congress a couple of times to explain why he was killing people in foreign countries. I mean, my cousin had a good view of the world. He didn't accept bullshit much. And his comments where he goes, this place is going to power down. You just wait, Jack, until a majority of the people are receiving checks and a minority of the people are paying the checks. Yeah. Guess what happened in 2010?
Well, aren't we right about there? Aren't we 51%, 49%?
51%.
Yeah.
51% of the people in America paid zero federal.
Yep.
49% had a federal exposure. And when I brought this up to the Twitter feed lately, I was told, well, anyone who has ever paid taxes has a voice in the entitlements. And I'm like, okay, well, first of all, there isn't really entitlements. But let's be honest here. Why do you believe you are entitled to something in the future?
Right.
You're not. Okay. Nowhere in the Constitution am I aware that the word entitled is actually used.
No, I don't know when we became, I like to use the term
entitled.
Well, I don't know when we became a nation of everybody gets a trophy, but it happened sometime in the last 20 years. And,
that's a great comment, by the way. A phenomenal comment. We're all equal, and we need to cap the upside and subsidize the bottom side. And that way we can all be winners. All of our kids are from Lake Wobegon.
I don't know when it happened, but it wasn't like that when I was growing up in the 60s and 70s. And
same here.
I don't raise my children that way, but I sure see the children whose parents helicopter over them, don't let them get a boo-boo, and then those kids, when they're 21 and they graduate with a communications degree, think they need to be making $100,000 a year. And I'm like, what skills do you have? You can't even text. You text like you're using some,
I've got a daughter in college. I'm right there with you, my friend. I have one daughter who, I'll even put it this way. Everyone gets to go off to college. She went off to college and got a beach house in Santa Cruz where she could walk to the beach. She was home a year later. Now she's gone, she then went to community college for a year to show that she could go back to college. And then, she's back in Santa Cruz, at the university. But, in this world, we've reached a stage where we believe that no one is supposed to have a boo-boo, and no one is supposed to lose, and no one is supposed to. All right, I'm going to cut to the chase here.
Yes.
Yes. GE. I'm going to go right to a finance example. GE, led by a guy named Jeffrey, who should not be employed today. Or if he is employed, he should be employed by another company who is willing to take the risk that he would blow up their company. Take a look at what GE did under his control to the buildup in 2008. He literally took the company that everyone thought of as America. Mm-hmm. And he took America's, if it's good for GE, it's good for the economy. It used to be a statement that you and I grew up with. And so where was GE at the crisis during the event? It needed something in the range of $50 billion in cash in order to make payroll, because quite frankly, they had managed that company into the ground and bankrupted it. Mm-hmm. Now, does GE pay taxes? Any taxes?
No.
The answer is no.
No.
Is GE keeping its businesses in the U.S.? No. Today's headline was that they're sending their X-ray division to India. Mm-hmm. So the United States is writing $50 billion checks to companies that don't pay taxes so that they can export businesses.
Yeah.
Why does Jeffrey have a job, and why does the government of the United States subsidize him?
Because he's got pictures of the skeletons. I don't know.
I guess.
It's the same thing with.
Yeah. No. This is the stuff that personally makes me angry.
I'm from Detroit. We saw it in the '80s with Chrysler. We saw it just now again with General Government Motors. We saw,
Government Motors.
Yeah, and now they're public again, whatever that means. But the only one that made it through was the Ford family, and it's because they still own the majority of the stock.
And what's interesting is Ford made $1 billion a month last quarter.
Yeah, and again,
Ford's paying off it, and Ford is deleveraging, paying off its debt as fast as it can.
And again, their stock got crushed, but it was legit, and they knew they'd come out of it okay without anybody's handout. And again, that's probably.
And let's put it this way: if I ever buy an American car, I've never bought an American car. I'll be honest. Okay, I have purchased a used American vehicle because I needed a beast to run around in the mountains in the wintertime. And so I have a Ford. Yeah. And I can tell you that the only rig I'll ever buy that is American is Ford at this stage.
Yeah.
But
I think,
if you ask me what's in my driveway, it's good German engineering.
Yeah, well, I have no problem with that. I think I've been a big fan of, Japanese and German cars, and I grew up in Detroit. The only American car I bought was...
I drove a Toyota pickup for 15 years once. Serious. I stole it from my dad. He bought it brand new, and it was the hangar queen at the house, and so I started driving it, and Dad said, well, you should start making me payments. I think I made like $100 in payments on that rig, and I added 200,000 miles to it.
Good. That says it all. I think
it was still running when I gave it to my nephew.
I think what we're talking about here, Jack, is they're all the same issues, and I think the reality is, and I tend to be more optimistic, and your cousin has been absolutely correct to this point, but there's still time, I think, to pull it out if we allow our banks to fail, if we allow these companies to fail, and allow the true free capital to flow. There's money out there, of course, and it would buy up. I mean, listen. If banks were to take all of their real estate, don't tell me real estate's getting better. I live in a community here in Bend that's all real estate all the time, and it makes me disgusted because the paper's in cahoots because they get paid by the mortgage companies, realtors to talk about how great things are in real estate. That's their life stories. The paper's dead anyways. To me, they're all papers are dying entities, whether they want to admit it or not, from the New York Times down to the Bend Bulletin. So it's dead. Let it go. Let that evaporate. Let it come to the new media, whether it's the web or wherever it may be, and deliver a paper once a week that somebody wants to read if they want to pay for advertising there. The point is, these banks, if they were to truly de-lever and mark their real estate, which they still haven't, all these banks, including, I was going to ask you about Bank of America, they should have another stress test there because that thing's clearly never come out of its insolvency. But let these assets truly float to what they're worth, and let's stop let's stop having federally backed mortgages for up to $750,000 when the property's worth $150,000.
Well said. All right, and this goes to our European earlier comment that didn't get really finished per se. The Europeans are holding sovereign. All right, European banks have two pockets. They have a pocket that is their trading and a pocket that is their savings capital. Mm-hmm. Okay. So if they hold a sovereign debt and they're trading one, they're supposed to hold it at mark to market.
Yeah.
But the banks quickly realized that they could not handle the haircuts that the private market has already applied to the trading of these bonds.
Right.
When you have Greek bonds trading at 35% yield, you know for a fact that those things are trading generically at 50 cents on the dollar.
Yeah.
Okay, and we'll just use that as a generic number. That 50 cents on the dollar is being held at 100 cents on the dollar to 98 cents on the dollar on European bank balance sheets where they are holding Greek debt.
Right.
Okay, and they categorically say there can be no haircuts because they can't handle the hit to the capital.
They can't handle 2 points, let alone not forget about 50, exactly.
And that is the problem that is predicated around the world. I mean,
yeah, so I agree. It's basically, as you could probably say the Slavic nations west to North America. South America is in pretty good shape because Argentina went bankrupt so many times, and the last time, they're fine again.
They stayed bankrupt.
Yeah, but the point is, every time one of these countries does this, they come out okay, and they refresh, rejuvenate, and pick themselves up and start over.
Iceland. I call it the Iceland model.
Yeah.
You know what? They said, we're not going to support our banks. We are going to deal with our people, and we are going to take the hit.
Yeah.
And within, 15 months, they were growing again.
Yeah, well, you pull your troops back from wars that aren't serving any purposes, and like you said, you either take in more taxes, okay, that's an option, and or you spend less money. I mean, it's basically how any household that's starting all over has to do it. So it's pretty basic and straightforward. So, getting back to the Europe question, I'll ask you the big picture. Could Europe, do you think they'll have to have this fiscal integration, or will it simply fall apart before, that happens?
Great question. I've been calling for the dissolving of the euro since 2005. So there's a bit early on the scale of things, if you want to call it that. I believe that the only working solution in Europe, if you have the euro or equivalents, is a two-tiered structure in Europe. So you have a northern euro that is very sound, has great savings, and all of a sudden Porsches are really expensive again. I mean, I remember when I went to a private prep boarding school, and this is in the 1980s, and all of the dorm rooms, we had these posters of 911 Carreras, okay? Because it was unreachable, right? Even for rich kids, okay? They only made a few of them, and they were expensive. All of a sudden, 911s have become almost the equivalent of a VW Bug. Mm-hmm. They're everywhere, and BMWs used to be the ultimate driving machine. The reason why these things were unreachable was because they were too expensive, because the mark was worth too much. Mm-hmm. That was the natural state of things. If you take great engineers and they produce great assets, those assets should cost more. Yeah. Okay, but what we have here is that the pigs have devalued the euro to such a degree that Germany is producing extremely high quality products at American competitive prices. And given a choice, do you want a government motors vehicle or do you want a Mercedes? Right. Okay, so the only way this really balances is if you get, quite honestly, the Northern Europeans where they have an extremely strong currency and they are export driven like they have been, but people have to save up their money to buy that damn product. Yep. And then down in South Europe, you have devaluation of the week and you have vacations on the beach and people go there on vacations and it's understood. Right. That works. But you can't combine the two of them so that Germany gets a export advantage while you have now the crumbling of the whole edge of Europe. Yep. And another one that people should be scared about, Hungary. Hungary flipped its finger to the financial world and said, we don't need any help from the IMF. Y'all can go screw yourselves. We'll suck it up and do it ourselves. And then that was about a year ago. And over the last 6 months, Hungary's debt is being pushed out and pushed out and being pushed out. It used to be held internally. And what I've noticed over the last 6 months is the moment that you have an Eastern European squeeze, because everyone's focused on Western Europe right now. The moment you have a squeeze in Eastern Europe, you're going to have Hungary go poof. And then from there, you now have the Eastern Bloc dropping, because the Eastern Bloc is reliant technically on the Western Bloc, has been for the last 10 years. So you're going to have nations like Austria squeezed, where all of a sudden they've taken their national savings, they sent it to Eastern Europe to try and bring a rate of return into their nation, and now they're going to have to write off those investments. I believe that Europe shatters. And after the shattering, you'll get a federalization of some of the states.
So if Europe shatters, is Russia a major power again? Or are you including them in the shattering?
I believe, based upon the technology that I have seen deployed in the United States and the technology that I know is being deployed now in Europe, that the primary mega cap oil and gas companies are doing shale oil and gas drilling in Eastern Europe with the concept of trying to replace the Russian supply of gas. So Poland, Germany, that area. There are some phenomenal shale fields there. Also, there's a huge one in Holland. That whole band across there, over the next 10 years, will start to experience the equivalent of what happened in the Barnett Shale and then the Bakken Shale in the U.S. And that is on land Europe will actually start to produce hydrocarbons. And as that happens, they will not need Russia's supplies as much. And when you take a look at fields like the Leviathan field that was found just off of Israel in the Med, there is now there is access to hydrocarbons that have not been released yet that will change, in my opinion, the European energy structure so that they are not reliant as much. Russia is going to find themselves needing to export more and more to China and or Japan through a trans-Siberian pipeline, in my opinion.
Okay, so tying this all together and see if you agree with me on this. If that were to play out along with the dollar possibly strengthening under some scenario that we both suggest is possible, oil prices will be where election 2012?
$80.
Okay. I'm saying 40 to 60. So you and I again are
my call on the Macro Contrarians a month ago was 75.
Well, you're the most aggressive that anybody's been, close to my 40 to 60. Mine simply goes to politicking. They need it at 40, 60, whoever they are, for the voters to vote for them. Whoever they are. I don't know if they is Republicans or Democrats, but they need it at $40 to $60 to get their votes.
Well, we had Bush because we had Bush the first, Bush the second, and now we have Bush the third. I'm sorry, go ahead.
Well, no, you're right. And going back to what you said, we can't get those 51% entitled non-paying taxpayers to vote for us until we get, because there are no jobs for them, because all those companies, GE that we talked about, GM, IBM, et cetera, have no jobs in this country. They've all pushed them offshore. Therefore, the only thing that we can get them to do to keep spending is get gas back down to $2 or $2 a tank subsidized. So I don't know, 40. Let's call it 40 to 80, and we'll call it good in my book.
50 to 75 works.
And we're sitting here at 100 today. So it's only 15 months away. That's the scary thing. Is it's not that far away. And that to me, when you talk about the loaded boat, I use the boat analogy all the time. Everybody is long to the bejesus oil right now, and I don't think oil is being consumed, internationally, worldwide, as people think. China's definitely slowed down. Western Europe, America. I mean,
the growth spot that you will find in hydrocarbon consumption over the next 2 years is Japan. Yeah. Japan is going to ramp its hydrocarbon consumption via LNG.
Okay. All right.
Because by May, there will be no operating nuclear reactors in Japan. They will have removed 27% of their electrical grid.
Yeah. And you have, 150 million people on that island?
127 million, give or take.
Okay. So that makes sense. That makes a lot of sense.
So they're about to lose 27% of their electrical grid over this year. And that is going to have to be replaced with peaker plants. GE should be able to sell a bunch of turbines, although in truth they have the tech to build their own. So
right. So to respect your time here, Jack, and we'll have to do this more regularly. We'll have to do this more regularly.
Absolutely, I'm open for these calls. I enjoy them.
Give me one or two things you see playing into the last 5 months of 2011, and then maybe a longer picture into the election. I gave you a couple of mine, and I'll beat the drum. And
we're at an inflection point. If these guys keep pushing the debt ceiling at all, we'll just call it, because there's multiple arguments being laid there. If they push things harder, there's going to be an increase in the dollar value, ironically, and the treasuries that are issued go up in value. However, the damage is going to be more significant than people realize on the surface. And the next 5 or 6 months, I think that would be the opening for the Federal Reserve to come in with QE 3.x, whatever you want to call it. And at that stage, silver and gold fly. I just saw my daughter crawling on the floor behind me, trying to stay off camera. So I think, I'm about done here. They're moving across in the background. In simple terms, I think the next 5 to 6 months, we have a scenario where you could have the dollar blow out a bit, and we all start looking real nauseous. And then the reality of Europe strikes. Because, here's the thing, is that Europe has not cleaned itself up. Europe is not getting better yet. And at the point that the U.S. gets its deal done, it raises its limit or it agrees to cut spending enough. Basically, at the point that we take this off of the Kabuki Theater here in D.C., at that point, I think Europe shatters and the dollar goes stronger. There's nothing backing the euro except the U.S. If you take a look at the money we funneled into Europe in 2008 during the crisis, Europe exists because America is willing to write a check.
Right.
And they act like worthy. Anyway, I'll just put it this way. If your banks have no capital and you need to borrow hundreds of billions of dollars from someone on another continent to stay in business because you mismanaged your risk profile so badly, you're out of business.
Right.
You failed. And they haven't done anything to fix the failure. So I don't think that the failure is over.
And they'll be allowed to fail. And again, exactly.
So, yes, I'm totally open to more of these conversations. I enjoy talking the macro picture. And macro is one of those things that you bounce around the world.
Right.
One data point that you brought up and I hadn't commented on. I really, really like the Brazilian markets at this time. Give me a market that has natural inflation, not deflation, and not stagflation, but natural inflation. And
couple that with the youthful population, the opposite.
A youthful population and high yields.
Yeah.
So, let's put it this way. If you're an American, you want to own a high-yielding equity company in Brazil, because as the dollar goes down against the real, your monthly dividend or quarterly dividend goes up in cash flow purposes.
Yep.
So, just walk by, Chase. So in simple terms, if I was a retired investor in his 50s or 60s today, I would be looking at locations like Brazil, where there is companies that have $5 to $10 billion market caps that are paying 4 to 8%, because you will get a double kicker on the devaluation of the dollar longer term, and you will have your money outside of U.S. dollars if, in fact, we take a real hit.
Right.
But, I see the hit more of near term now, and it starts to go away, honestly, about the time Europe really starts to hurt. Yeah. And what hasn't been brought up is truly the slowdown in China is real. The scale of large numbers is working against them at this stage.
Right.
You can't have an economy that runs on 50% investment in capital assets. In my opinion, China is the most over-leveraged, ready-to-pop bubble on the planet.
Yeah. Yeah, but again, that will be a good thing for China as it comes out of that, because then they've got, again, at least they've been spending money on infrastructure, I would say, versus false financial instruments, as we did in this country for the last 20 years.
The only problem in China, though, and this is between you and me, and the recording, of course, is that their infrastructure was not spent on quality. When the U.S. spent money in the 1930s on infrastructure to put people to work, we still have use of that infrastructure. Those dams are still standing.
Barely.
In China, they're building railroads by the mile, not by the quality mile.
Yeah.
So when a lightning strike storm happens, it stops a high-speed train dead in its tracks, and 30-some people die because the next train behind it hits it full speed.
Right. Yeah, it's crazy.
They're tearing down. This one I loved. They were building a high-rise, and they were 20 stories up when they decided to tear it all back down and rebuild it to go to 50. I mean, the decision-making there isn't even like they're building capital assets to use later.
Yeah.
They're just building capital assets to build capital assets. One picture I saw, there's a paved road, and they have a crew, and they are disassembling the road and moving the bricks over their shoulders, and there's another crew behind them putting the road back together.
I know, that's crazy.
That employs people. You're
Yeah.
not getting anything for it, though.
Right. Well, Jack, it's going to be an interesting next 15 months, definitely into the election. It always is, and I think this year probably more than ever, and hopefully we'll take our proverbial medicine here in some number of areas. We could have done it last time. We could have done it in that 07 through 09 period, but we decided not to. And every time we delay it and kick the can makes it worse. So let's hope that some stronger, rational minds will prevail and win over the hearts and minds of some of the folks to at least swing congressional votes to some semblance of less looting and more reality. And we'll talk here again soon, Jack, from the great state of Oregon. I appreciate you coming on today. And again, you can follow Jack at macrocontrarians.com. He's got a video blog there. You can follow him on the Twitter stream, Jack H. Barnes. You see his name here in the Ubu, and we'll definitely look forward to having some more macro talks, because this stuff is, I think, more powerful, the George Soros type talks versus every tick of a trader, because I change my mind too often to put stuff out on that type of feed. So I appreciate it, Jack.
Hey, Matt, I look forward to you dropping into the Macro Contrarian Roundtable. We'll have you as one of the roundtable.
Love to do it anytime.
All right.
All right.
Thank you.
Thanks, Jack.